Hey everyone, welcome to another Workshop Wednesday with Amp to Glamp. We are so happy that you are joining us this evening. We have a very special guest joining us, but before I tell you about the special guest, there is something that I need to tell you about. You may notice that there is an empty chair here. And that is because my son had some issues with a flat tire right before he had to take an exam, and his exam doesn't get out till 9:30 at night. So John went over to the college to change the tire for my son so that when he came out of his class at night, he wouldn't have to deal with a flat tire so late at night on an empty campus. So hopefully I kept the chair here so that maybe John will be able to join us if he finishes with the tire. So thank you so much for joining us. This is a very special Workshop Wednesday. Like I was saying, we have a special guest. Her name is Kimberly Klein. Kimberly Klein has over 17 years of experience with financing throughout many different brands. And tonight she is going to talk to us and give us some tips and secrets that relate not only to RV financing, but also to auto financing. And I am really, really, really excited. So, folks, let's just give a really good welcome to Kimberly Klein. I'm going to bring her onto the stage right now. Hi, Kim.
Hello. Thank you so much. I am so excited to be here, and it is such a pleasure to know you and John. I love your channel, and I tell
Thank
everybody.
you.
I was just telling somebody yesterday that you guys are the real deal. You want to know somebody that you want to talk to somebody and learn from somebody that knows everything about RVs. Amp to Glamp. That's
That
the place
is
to
so
go.
kind of you. Thank you
The
so
truth.
very much. Thank you. I appreciate
It
it.
absolutely. It's the truth. And John, look at him. I wonder if your son had a tire and wheel plan. No, your son's tire and wheel plan is actually John.
That's
That's
right.
that's
Well, he does have AAA, but somebody has to be there if AAA comes out. So
Yep.
because he was taking a test, he couldn't even use AAA. But we've always taught him, like, once he had, it's like, if you have a car, you have to know how to change a tire and do certain maintenance. So he knows how to do it. It's just that it's late at night and it's going to be very dark when
Yeah,
he test. So we love our son, so we're going to help him out.
absolutely. Always, 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 always.
So you have some really great information to share with us, and we can't wait to hear it. I'm sure that the people that are watching can't wait to hear it. And if you have any questions as Kimberly is going through some of her tips and tricks, please put those questions in the chat because we'll get to them all, as
Yeah.
many as we can, and answer them for you.
Absolutely. Well, I am not a car salesperson. Never have been. Never been a car sales manager. I've always been a dealership finance manager. And when I say a multi-brand dealership finance manager, what that means is I was taking care of many brands at the same time. So I may have had Subaru, Mazda, Volkswagen, and Buick all sold in the same day. They all have different paperwork, and that's called a multi-brand dealership finance manager. So that's what I used to do. Now, a lot of things are very, very similar when it comes to the RV market. And that's what I thought we could go over a few things. I have a couple of notes here, if you don't mind me taking a look.
Please do take a look. Do whatever you
Okay.
have. So one of the big things with buying an RV is the financing, and we
Yeah.
had a lot of people ask us questions about how the process works, particularly in the last video that we did about the industry market report. We have a lot of our viewers looking to buy new RVs, and you can figure out like the part where you're dealing with the salesman, but it's a lot harder to figure out the component that deals with financing. To a lot of people, that seems like a mystery to them.
Yeah. It does seem like a mystery. And it kind of is a mystery. It really is. It's a very tight, gate kept, if you will, office, the dealership finance office. There are a lot of secrets, and that's what I'm here for, to help you through that. Now, I do know that in the RV industry, whenever you're going to dealerships to look at your, and I love the recent videos of you at Hershey recently, you and John, um, that you want to handle things the same way. So I always tell everybody to know your credit first. I mean, that's the foundation. Unless you're paying cash for a new or used RV, recreational vehicle, if you're going to finance even a little bit of it, make sure that you know your credit first. And I'm sure you probably talk to a lot of people about credit as well, Sherry. I,
So
I
where would
would
you recommend that someone's credit score be at before they even consider purchasing an RV?
a 700 plus. 700 plus. You want to aim for a 750. Okay, so
Okay,
that's what you want.
and why is that? Like, what's the difference? Like, if I have a 750 or a 650, what difference does that make in the financing office?
It's a huge, huge difference, especially right now in today's market with when it comes to RV and automotive lending, actually any kind of lending. Um, Lending guidelines are what we call very tight right now, meaning they're just not lending money unless you have excellent credit, which is going to be a 750. That's very good credit. You also want to make sure that you have your debt to income ratios in line. Make sure if you have, let's say, I'm going to use easy numbers, a credit card for $1,000. The limit on that card is $1,000. Make sure you are well under 30% usage of that credit card. And if you can, get it paid off first too. So that's going to help get your score up there. But why you want to aim for that 750, like you asked, Sherry, is because of interest rates. You don't want a crappy interest rate. You want the best interest rate that there is to offer out there, which, yeah,
So I have a question about interest rates then.
yeah,
So interest rates, like I know that there are different interest. There's like a buy rate and there's a sell rate, and I also know like a lot of people don't realize this that you can negotiate your interest rate. Can you tell us a little bit about how that works and what the difference is between those two different types of rates?
absolutely. And that is a slope. That's kind of a tricky slope, but you don't want to be the average buyer. I don't want anybody out there to be the average person that goes into your dealership and doesn't have this bit of knowledge. This is going to make you stand out from the rest. The dealership finance manager, RV or automotive, deals with indirect lenders. Indirect lending means that they're going to send your credit application with the structured deal. Structured deal is the purchase price of the vehicle. If you have a trade, how much is that worth? How much are you putting down? All the monies, the structured deal. They're going to send that out to a couple of lenders that they know is going to give them the best buy rate. Now, a buy rate, BUY rate, is the interest rate that comes over to the finance manager on the approval. From there, because it is indirect lending, the finance manager can mark it up a couple of points if they want to. It depends on the term that you'll be taking out on the loan and what the dealership or what the lender dictates. But that's typically 2 points. So if the buy rate comes over to the finance manager at 6%, they can usually mark it up to 8%. And that is called the sell rate. And that's what you get as the buyer. The lender then pays the finance department a portion of the yield spread. That's what the difference is between the buy rate and the sell rate. It's called the yield spread or dealer reserve. And that goes into the dealership finance pot, and that's what they get paid off. That's a piece of what they get paid off of every month. What you as the consumer wants, you want the buy rate. And so moving along, once you know your credit first, the most important thing, then I always tell people to do a little bit of internet sleuthing. So take 40 minutes and sit down in front of your computer and Google credit unions in your area and in your state, as well as nationwide credit unions that have RV loans. click on the little thing that says rates and check out what their rates are. Um, Not because you're going to be going through that credit union, maybe you will, but because it gives you, the consumer, a great idea of what the going interest rates are out there. So it kind of arms you a little bit. Now, the second thing is you want to know the difference between a pre-qualification and a pre-approval. I have a video specifically on that on my channel that tells you what to be armed with whenever it's time to go in to finance your new car or RV. A pre-qualification is usually a soft pull on your credit. It is not a hard approval. It's not a solid approval from that lender. So you want to know the difference, and you want to know whenever you walk into the RV place, the RV dealership, and you're ready to go on one, um, and you speak to a finance manager or whoever it is that's going to be doing the paperwork for you, which I happen to know a few of them. They are finance managers. Then you can start talking about interest rates, and you can let the finance manager know, hey, I have 6% through my credit union. Just give me a purchase order and I will get it all set up with my bank and get the check back to you so that I can then take my RV. Now, this gives you an opportunity to see if the finance manager will say, well, I have a couple of banks that can beat that 6% for a certain term. Would you give me the opportunity to send it out for you? You can dictate whether or not you want to allow that finance manager to have the opportunity to beat your credit union interest rate by saying, okay, I'll let you do that. See if you can beat it by a point at least. And don't send it to any more than 2, 3 banks max. I know my credit well. I want to protect my credit. So now you're letting them know that you know about credit, and maybe they can. A lot of times, because it's indirect lending for the finance manager, they can beat an outside interest rate. You just don't know it. A lot of times, too, let's say you have a credit union in town. Whenever you walk into the credit union and you say, hey, I just want to check out your rates for recreational vehicles, that is called a lobby rate. A lobby rate, because you're standing in the lobby and you're getting the interest rates right then and there. And that's what they're going to post on their website as well. But make sure that some of your questions that you ask a credit union are, do you give any discounts for automatic payment withdrawal every month? Do you give any discounts for large loans, which could be for an RV? It could be, I don't know, maybe over 50,000, over $100,000. Do I get a discount for that? What kind of discounts do you have? Credit unions love discounts because it's good business for them. So that's a couple of tips there to get you started at least. So indirect lending, direct lending. Direct lending is when you walk into a bank and they give you the lobby rates. Indirect lending is whenever the bank is working via a finance manager.
Okay, I have a question for you. Thank you. That's like a lot of really good information. Some things I had no idea about. When you mentioned the lobby rate in the credit union, do you get and I don't know if I missed it or not, but do you get a better rate with the lobby rate, or is there something particular with the lobby rate that's different from what you might see on their website?
No. And that's a really good question, because here's a little caveat. Sometimes the finance office will be connected with your credit union. And that credit union might give the finance manager their indirect lending rate, which is less than if I were to just walk into the credit union. So you don't know. You just don't know until you speak to the finance manager.
I see.
But but typically published rates, whether it's on their website or whether you just walk right into the credit union, they are lobby rates. They are not indirect lending rates.
So it looks like we have a question from Anthony B. And he says, what rates are you seeing today for someone with 750 plus credit score on a 240-month recreational vehicle loan?
First thing I want to say is, Anthony B., kudos to you, because something else, this is a question that I get every single day. Kimberly, what rates are you seeing for a 750 loan? People forget about the term. They forget about the term. So Anthony put in here 240 month. Thank you for that. People don't realize that the longer the term, the higher the rate is. I did a little bit of Googling myself the other day on RVs, and I saw, I think it was Suncoast was 7.5 to 7.85. So I'm going to say about 7 to 8%. And I have a note on here as well. Yeah, Suncoast is in Florida, and their new rates are 7.25. There is an online lender called Lightstream. I would check them out too. I don't endorse any lender, just so you know. I'm not an affiliate and I don't endorse any lender. Lightstream I like because they take a half a point off whenever you have good credit like yours, Anthony, and you set it up for automatic withdrawal payments every month. And I also saw 7.5 at Michigan schools and government credit unions. So you can take that information and kind of figure that typically, depending where you are in the country, they're going to be anywhere from 7.5 to 8.5% for 240 months. That's a great question. And thank you for putting the term in there. Yes, people don't just say, hey, what's the interest rate? You need to know what term you're talking about. The shorter the term, the smaller the interest rate.
Hey, Sir Rich, thank you for joining us. So what other tips do you have for us?
All right. I have my notes here, Sherry. And that I wanted to go over. All right. So you want to know your credit first, and you want to become aware of the interest rates as well as the term. Term equals months or years. Lenders deal with months. So whenever you have found your lender, the first thing that you want to do at the dealership is to go over your recreational vehicle purchase agreement, also known as a purchase order, also known as a buyer's order. It all depends on what state you're in. Now, this is going to be a line by line document that breaks everything out for you. Before you go and sign anything else, make sure that you take a look at the final purchase agreement for your RV. It typically is going to start with the purchase price minus any discounts, and then it's going to add in any state and regulated fees like taxes, tags, title, registration, that kind of thing. It's then going to show any trade-in that you might have and the credits like your down payment. It's going to give you a bottom line figure, and that bottom line figure must match the bottom line figure on your bank, aka loan contract. So again, before you sign anything, you go over that purchase order line by line.
So I have another question for you. And, we had a viewer that came to us during the RV show, and they actually purchased an RV there. And I was kind of surprised to see this. I've seen it a lot on with cars, but I haven't seen it as much with RVs, at least not with any of the ones that we've purchased. Can you tell us what you think about doc fees, document fees?
Mm-hmm, mm-hmm. Doc fees are what some dealers call a necessary evil. Um, and I just did a video on doc fees as well. Doc fees are something that a dealership 9 times out of 10 will not negotiate. There's not a specific area where that money goes for doc fees, but you might get an excuse or you might have a salesperson say to you, "Well, the doc fee is so that we can pay the tag and titling people." But you're already paying tag and title and registration fees. Or a doc fee is just for our sales manager every month. But doesn't the sales manager have a salary and make money and commit? Like, what exactly is the doc fee? You're going to get all kinds of answers. If you try and negotiate a doc fee and you're successful, that money will come off the purchase price of the vehicle, not the doc fee itself. Just so you know that. Um, I'm trying to think what else I can throw in here about the doc fee. Some states have a cap on the doc fee, and of course, even though the dealership doesn't have to, they're going to max that cap. There are some dealerships, like in Florida, Earl Stewart in Florida, who part of his marketing campaign is we don't charge a doc fee. We don't have a doc fee. So good for Earl. But most other dealerships are going to max out any kind of a state cap. And unfortunately, there are still states out there that don't have a cap. And you see ridiculous doc fees. Florida, again, is one of them, where you're going to see a $1,200 doc fee. It's crazy. Uh, do try and negotiate it, but it's not going to come off your purchase order. It's going to come off of the purchase price.
So I think that we always encourage our viewers not to pay the extra fees, but that in the end, what matters is the out the door price. So if you have, one dealership and let's say the out the door price, and this is going to be really low for an RV, right? Let's say it's like, $30,000, but they have a bunch of fees, and the other out the door price is, $32,000, and it doesn't have any fees. Then you want to go with whoever's going to give you that best price, but we do encourage people not to pay fees. And I did encourage the viewer that I saw to go back and say, no doc fees. And they did take it off for them. So it definitely is something that you can negotiate.
100%. 100%. You should always try, no matter what. You should always try. What's the worst going to happen? They're going to say, no, we don't, but we have a policy where we don't budge on our doc fees. Well, in that case, why don't you make an exception? Because I want to buy this from you and I want to buy it today. But you got to take that $900 doc fee off of there.
And, right now in the current state of things, I don't know who's going to be willing to lose a sale over something as small as that, to be honest with you, especially when you're buying a big ticket item like an RV, for example. Folks, if you have any questions for Kimberly, please be sure to go ahead and put that in our chat. She is here for us for the hour to answer any questions that you have. So if you have questions, please, we want to hear from you. So what other tips do you have for us? Is there anything else you can tell us to help us to save some money when we're purchasing an RV? Or even, a lot of RVers, they have interest in purchasing trucks, because we need, if you have a towable, you're going to need a brand new truck. And we know how expensive those are right now too. And so, we had this open to both RVs and to automobiles, trucks, car, anything that you want to talk about. Any more secrets or anything else that you can tell us to be prepared about when we go into a dealership to make such a big purchase?
Well, I think I have about 3 more here. The first thing is, on your loan, you always want to ask if there's a prepayment penalty. And Sherry, I know you know what I'm talking about. I think you may have mentioned it as well in a couple of your videos. A prepayment penalty. Most vehicle loans today, RV and automotive, don't have a prepayment penalty. That is something that it can be state driven as well. So that's a good thing. But you always want to make sure, because there is a trick that the finance manager likes to say, and that is, well, you just can't pay this loan off for 90 days. Well, if a finance manager, whether it's an RV or a vehicle, ever says that to you whenever you're signing your loan paperwork, all you need to do is say, okay, so can you circle that where it says not to pay my loan off or refinance it within the first 90 days? Show me where that is exactly on my contract, on my bank loan contract. And they can't. They can't. The reason being is because that's just so that the finance manager doesn't get a chargeback. So if you go out there within the first 90 days and you refinance that loan because you found a lower interest rate, that money gets sucked out of the finance manager pot for the month, and it's called a chargeback. So whatever they made on that loan gets sucked out of their paycheck. So that is a question that you always want to ask is there a prepayment penalty on this? And make sure you understand it.
Are you saying that dealerships or salespeople or finance people will be dishonest with us?
What? Did I say that? I think they would call it protecting their paycheck. But that's how it works. That's just how it works. It's called a chargeback. They don't want you to pay it off or refinance it within a certain period of time, typically 90 days. Sometimes they'll tell you 6 months, but it's simply to protect their tail end. But you, the consumer, you need the best interest rate. So if you find one, don't let the tail end of the finance manager deter you from going to get that better interest rate, because they're going to be making it up on the next person and the next person.
Good advice. So you have a couple more tips for us?
I do. All right. So we got a prepayment penalty. Make sure of that. Now, products. Let's talk about products real quick. What is a product? What do I mean when I say product? Well, and Sherry, you can attest to this. You have certainly bought more RVs than I have. But in the automotive dealership, there's something called a menu, or sometimes not. Sometimes a finance manager doesn't use a menu, but a finance manager will offer you additional products such as gap coverage. Now, I know that there is gap coverage available for RVs. What is gap? Gap, guaranteed asset protection. Gap is something that if you finance, it's not something you can come back and get later. It needs to go into your loan, or sometimes your automotive insurance will carry gap. However, your automotive insurance generally is only going to cover a small portion of the gap. Well, what is the gap? So if you get your new RV or your new truck and you pull off the lot and somebody hits you and totals it, well, you have a loan this big, but your insurance company is only going to cut you a check this big. So let's say you owe $40,000 and your insurance company gives you $30,000. Well, you still have a loan for $10,000, so that you're not paying on something that you no longer have. Gap pays your loan off in full so that you can turn around and get into another loan. And that's what it does for you. When do you need gap? You need it the most from day one, from the day you pull off the lot, until about halfway through your loan, when you flip over and you start paying more and more on principal. At that point, which is another one of my tips, cancel your gap. And if you still have that loan, the prorated amount will come off of the principal amount of that loan. Gap is very important. You also need gap if you are putting less than 20% down. Once you hit that loan to value ratio of 80%, most lenders won't even let you have gap coverage. You don't need it. But if you're only putting a small amount of money down, that's cash out of your pocket as well as trades and any rebates you're getting. So that's immediate equity into the vehicle. If you're under that 20% mark, I would get gap. With the finance manager, however, this is a product. And You don't have to pay the price that the finance manager hits you with. Negotiate the heck out of that price. I really, really understand gap. I like gap. I would like to have gap, but that's just too much money. And negotiate the price of it. Now, the rest of the products are going to be extended warranties on vehicles, tire and wheel plans, maintenance plans, key care, denting, paint and interior, all of those products. You don't have to get them that very day. You can take your time and shop around. If you decide you want them, you're going to have to put them on a credit card. You can't wrap them into your loan. But gap is a biggie, and I would like people to pay attention to that. Yeah.
One of the things I like to do when I go to a dealership, whether it's particularly for the RV, is sometimes when you're there, you're tired, particularly with an RV. You're buying an RV, you're going through, you're doing an inspection, you're learning everything about how to use your new RV, and then you're going to finance. You're signing your papers, and sometimes you can miss that. They start selling you stuff and you're like, oh my gosh, well, I don't know. Do I really need to have this? Is this really important? So what I always recommend is that before you arrive at the dealership, that you ask them to send you whatever products or anything like that they're going to try to sell you, whether it's the extended warranty. Send you all that documentation before you get to the dealership to purchase your RV, so that you have time to read through it, decide for yourself whether or not it's something that you really want, and then do a little research on how good of a product this really is, and how much would it cost if I got it from someplace else. And you can do price comparisons and things like that. And that way you're not sitting at a table with somebody who's saying to you, but everybody else gets this. I don't know why you wouldn't get it. It's a safety feature. Everybody needs to have this, you know.
Yeah.
You don't want to get caught off guard like that. And I wanted to ask you another question too, and that is, how much should, if I'm buying an RV, how much should I put down on, whether it's an RV loan or an auto loan? What's a good amount to put down on that purchase as a down payment?
Absolutely 20%. It's a good aim for 20%. 20% of the purchase price of the vehicle. 20% of your OTD, I'm sorry. So 20% of your purchase price, OTD being out the door price. And Sherry, this is why I love Amp to Glamp so much, because you guys preach about being prepared. And so do I. I want to make sure that people, even a little bit, when you walk into that dealership and you are prepared even a little and you know the lingo, throw out a word, throw out the word buy rate. All of a sudden, I promise you that you are not the average buyer. Would you agree with that? I mean, how many people walk in there and it's late at night and they're just like, oh, okay, just show me where to sign.
Absolutely. And you're at a real disadvantage. Like, you should never buy an RV or any automobile if you're tired, because then they have you, right? They're the ones who are commanding everything because you haven't done your research. You're not thinking clearly. The numbers start to jumble. Either that, you never want to be too excited to buy it either, because then you're like, you don't want to fall in love with anything, right? You want
Yeah.
to be smart about your purchases. And you're saying the same thing. This is why I love your channel so much, because you give so much good information that helps people to do research on these products. And folks, I really, really plead with you, please check out Kimberly's channel. I have it in the chat. I'll put it down here again, but her channel is Auto Finance Sense, and it's a wealth of information. I mean, if you're purchasing anything, you really need to go and watch all of her videos, because I learned so much from watching her. That's where I learned about buy rate, sell rate, so many different things.
Thank you so much, Sherry. Yeah, I mean, there's so much to learn. There really is. And it can be overwhelming. I completely understand that. It can be very overwhelming. But I promise people, just take a little bit of knowledge. And also, that's going to build confidence too. Drop one little word, and that is going to build your confidence. I promise. I promise. I wish I could go to the dealership with everybody. I could walk in the door with them and just go with everybody to the dealership.
maybe you should do some consulting.
Oh, I do. Oh, I absolutely do. I'm working on a couple of things to help people out more and more and more. But Sherry, as far as loans go, if you're going to be financing, whether it's a car or an RV, obviously I would think your chances are more that you're going to be financing an RV. Um, but 20% down, the lowest interest rate you can find, if there is a manufacturer incentivized subvented rate. Subvented is a term that is dealership lingo. Use it. Use it. So then I promise you that they're going to realize real fast that you're not the average guy. That is a manufacturer incentive. So maybe a 1.9, a 0%, a 2.9, a 3.9, but be sure you measure the term that goes with that incentivized rate. Okay, 3.9 sounds really, really great right now. But whenever you're looking at a $40,000 vehicle, that 3.9 at 36 months, the term, um, that can give you a steep payment every month. And I know we're all payment buyers. I am. Everybody's a payment buyer. We want our payments low. Don't be. And I'll tell you, there is an RV website. It's a large one, and I'm not going to say their name. But in their whenever you're looking through art, it's on the main page too, and you have a little filter. One of their filters is monthly payment. Don't fall for that, people. Don't fall for that. Don't click that filter. Because this is all psychology too. You're mentally going to get sucked in to, Sherry, look at that. Our payment could only be this much, And yes, this RV website actually has that on there. They want you to do that. Don't do it, people. I love a calculator.net that I use for everything. Auto loans, any kind of loans, go use it, plug it in. That's part of your research. Know ahead of time. Don't let them tell you what your payment's going to be. You know ahead of time where you're going to be.
Exactly, because I guarantee you're going to end up in the long run paying a lot more if you're going just asking about payments than if you do your research ahead of time and you know what it is you want to pay for that vehicle and you know your rate, you know your term when you walk in the door. Yep.
Yeah, 100%.
Looks like we have a question here from Van Gogh Nomad. Do you recommend paying the RV outright? Please come meet me when I purchase my rig.
Oh, how fun. Listen, if you have cash, that's not a bad thing. The only thing I would do is make sure that there aren't any incentivized rates that are out there and available for you. Because if there are, instead of taking all of my cash and putting it onto something, especially right now in this economic climate, if there was an incentivized subvented rate, let's say a 3.9 for 72 months, then I will take some of that cash, probably half, and use it as a down payment. Always having that liquid cash sitting back here that I know I'm going to make my monthly payments with, but knowing I can pay it off at any time. Now, everybody's different. That is a very personal decision. And personally, I like to have some liquid cash around all the time. And especially if there's a 0%, I would not pay cash for a vehicle. I wouldn't do it.
Yeah, I totally agree with you on that one because if the interest rates are very, very low, then it's better for you to have your cash and have your cash making money for you. So
Yeah.
Rango Nomad says, thank you. Excellent answer.
You're welcome. Thank you for being here.
Talking about cash, right? And maybe I've heard that if you mention that you're paying with cash, that the dealerships may not give you as good of a price. Is that something that you should keep close until you're ready to buy it, like whether or not you're going to pay cash or you're going to have a loan?
It is something that you should keep close. That was well said too, Sherry. And why do you think that is? Why do you think
But I'm guessing because they make money off of loans too, right? And so they can give you a lower price and then make it up on the back end.
100%? You got it. You nailed it. And that's exactly why. But that's quite frankly none of their business. Okay. Of course,
Why do you do that?
that's none of their business. Whenever you walk in the door and somebody says, "Well, what payment do you want to be in?" Or the first thing they say is, "Well, here's a credit application." That really just makes me angry. Here's a credit application. Just sit down and fill. No, don't do that. Don't do that. Um, where was I going with this? What is the normal qualifications for RV financing? Well, RV loans can be harder, and Sherry, back me up here. RV loans can be harder to qualify since they are considered a recreational luxury.
That's true. They also tend to have a higher interest rate than automobiles. And if you are thinking about full timing, um, don't go full time. Don't sell your house until after you get the RV, because then it becomes harder to get a loan if you're full time and you don't have a sticks and bricks. Because then you could just take the RV anywhere, and if you default, it's much harder for them to repossess that vehicle or RV.
Absolutely. I have heard of people trying to do that before too, Sherry. Well, we're going to sell our house and then we're just going to live in the RV. And then they try and go get a loan for the RV. And it cannot be a primary residence. Like you said, you have to have a sticks and bricks. And part of the qualification for the sticks and bricks is a certain period of years, typically 2 years, but the longer the better. And they might even ask for POR, which is proof of residency. They might want, okay, we see that you list your address as 123 whatever. But how long have you been there? Been there for 2 years. Well, 2 years, then we're going to want a utility bill in your name. We're going to want an insurance card and driver's license with that address on it, and maybe a cable bill. So be prepared for proof of residency if you're kind of on that 2 year line.
And then the other thing is, like, I think that you can find just about anybody that will sell you anything. It might get harder, but if you're like you said earlier that you recommended a credit score of, I think it was what, 750 plus?
Shoot for it. Yeah.
What would you say like the minimum is? And I'm assuming that too, if your credit score isn't as good, you're of course going to get a much higher interest rate. And over the long term, you'll be paying a lot more for that recreational vehicle, right?
Yeah, so anything for RV, anything under a 700 score, you're just going to be looking for a higher interest rate. Now, I always tell people that once you get down, sometimes, Sherry, even in the lower sevens, let's say a 701, 710, once you get down there, um, then it's not all about the score. It's not. It's about the structure of the deal. What is the structure of the deal? How much money are you putting down? Because the more money that you put down with the lower score, well, then the bank isn't taking as much it doesn't look as risky on paper if you put a good chunk of money down and you have a 680 credit score. So, I would say if you have under a 700, come up with more cash. Cash is king whenever you're talking about a down payment and a lower score. That can certainly help you, A, get approved, and B, get a better interest rate. So that's part of the structure. Are you trading something in? Then try and get the best trade-in value that you possibly can. So as much equity that you can put into the loan, the better you look along with that score, which means that the bank can work with the finance manager and get you a better tier. You might be on the border of a tier 2 interest rate. That can mean a jump of like 4 points. So you want to try and bump that up to a tier 1 the best you can.
So let's see. Van Gogh Nomad says, I never mentioned about paying cash. That's good. And then we have a follow-up question here. So would that be putting down more than 20%?
With what I was just talking about, probably.
If you have the
Yeah.
lower credit score, right?
Yeah. So let's say you want to buy a new Subaru to pull behind your RV, and you walk in with a 650 credit score and $1,000 down. That doesn't look good to the bank. But if you walk in with the 650 credit score and have $10,000 to put down, much, much better to the bank. So yes, I always say shoot for a 750 credit score, but also shoot for 20% down. Absolutely.
Very, very good advice. Absolutely. And the more that you can put down is probably the better. Any other tips that you have for us tonight? I think you might have one. Am I keeping
I
track?
do. I do. Oh, I have 2 more. One is super quick. Get your copies. When you sign all your paperwork, Sherry, I cannot even begin to tell you how many here's how that conversation goes. And I work with people every single day, and they're asking me questions about what they just bought and the loan that they just did 2 days before. And I'll say, "What's on your bank contract? Well, what term was the loan? What's the cancellation policy say on your extended warranty contract?" And it never fails. The answer is, "I don't know. They didn't give me my paperwork. I don't know. I don't have my paperwork." Hey, honey, do you know did we get that paperwork? People, get your copies of everything you sign. It sounds so simple. I know it does. It is a very simple thing, but like Sherry said, when it's late at night, you're tired, you've been there, you've negotiated, you're hungry, you're signing paperwork, and you walk out the door without your copies of everything you signed, that's your gold mine. You need that. So that's my next to the last tip. And then the last one is, I called it the bonus tip, because I worked for General Motors for 9 years and had a lot of fifth wheel truck buyers. You're welcome, Tia. Thank you so much for being here. We had a lot of people that were buying to pull a fifth wheel, and they didn't know that they were not supposed to immediately tow. So my point here is, if you're buying a pickup truck, make sure you ask the service advisor before you pull off the lot with that truck, and check your manual, because typically there is a 500-mile break-in period before you tow. A lot of people might know that, but I have run into a lot of people that don't. And what can easily happen, is if you hook up that heavy, heavy RV onto the back of your truck. I've had people come into the dealership at 9 o'clock at night, buy a brand new truck so that they can hook it up the next morning and drive across the country. And if something goes wrong, you have just voided your entire warranty for that vehicle. Now, I've seen, especially recently on Reddit, I've seen and I've heard salespeople at different dealerships say, don't worry about that. Don't worry about it. No, it'll be fine. It'll be fine. But if it isn't fine, you have voided everything. So please be aware to check your owner's manual, to check with the service department about a 500-mile break-in period on your brand new truck.
I'm so glad you mentioned that, because up until fairly recently, John and I were thinking about buying a Ford what was it called? I guess it was John's not here. He would know. F 250 or 350 or something like that. Because we wanted to get a Brinkley and tow it. We were going to try having a fifth wheel, and we had no idea until we spoke with you that we would have hooked it up the next day just to try it out and see how it
Yeah, most people would, right? That's what you
works.
bought it for.
I would have had no idea that I should not do that. So that piece of advice right there, I think is fantastic. That's going to save a lot of people's vehicles. That's great. So thank you.
Yeah, and I don't know if it's with all trucks, Sherry. I don't know if it's with all brands. I would assume it is. I know it was with GMC with the Sierra. So,
I didn't think about it, but I mean, most cars have a break-in period too, right? You buy a new car, they tell you don't drive it over, was it 50, 60 miles per hour, whatever, for the first so many miles. I don't know exactly what it is. So it makes perfect sense now that you mentioned it, that you would have the same thing for trucks as well, that you shouldn't really pull anything with that truck until it's gone through the break-in period. So that's really great advice.
yeah.
Well, thank you. So I cannot tell you how grateful I am that you joined us this evening. I have learned a lot. I really hope that everyone that's joined us has learned a lot. And I really, really, really want to encourage you to check out Kimberly's channel. It's Auto Finance Sense. Right there, you can see what her YouTube channel is. Please check her out. She's got lots of great videos, lots of really good information. And if you're looking to buy a car or you're looking to buy an RV, stop by her channel because you are going to learn how to negotiate like a king. I mean, or a queen. You're going to be an expert negotiator afterwards. Looks like we have a comment down here. This was so helpful. I learned so much. Kimberly and Sherry, I'll call you both when I'm ready to sign our contracts. I'll tell you what, if you're in the Mid-Atlantic and you're signing a contract in the Mid-Atlantic, I'll come with you. Just reach out to me.
Right. And I don't think you and I are that far away either.
No, we're not. We're not at all. Oh, thank you. That's great. Yeah, you know what? If you go to our channel to subscribe, please, subcribe to Kimberly's channel.
Thank you. I have a lot of it's not easy, Sherry. This is the niche. I'm not here to tell you how to get the best deal on a car. That's not my job. My job is in the dealership finance office. Now that does start out in the showroom. It does start there. But I'm not here to get the best OTD for you on a vehicle. So on my channel, you're going to see all kinds of videos that have a lot of topics. And again, it can be very overwhelming. All that information, all you need is a little bit to empower you. But I am working on some sort of a digital product right now to help people where it's all in one place. So Sherry, you're here to help people. I'm here to help people. And sometimes it's hard for people to believe, isn't it? Sometimes they're like, what are they in it for? What are they doing? They're making millions on YouTube. No.
I can show you what I made on YouTube, and it's nowhere near a million.
No. We truly are here to help people. We really, really are. So it's
when you get your digital product, please reach out, send us an email, and we'll let people know. When it's done. Yeah.
Absolutely.
Oh, your RV shopping. That's fantastic. That's great. Sherry was a great help at the RV show. Yay!
It's shame John's not here tonight. You're missing out, John.
I know. For those of you who kind of joined us late, you might notice there's an empty chair here. I was hoping that John would make it. My son, he called us from school. He got a flat tire at the college, and he had to go to an exam, and his exam ends at 9:30 tonight. And so we didn't want him to have to change a flat tire at 9:30 at night on an empty campus. So John went out to take care of changing his tire for him while he was taking his exam. So that's why John's not here. He didn't make it in time. So, well, thank you, everyone. This has been fantastic. And we'll catch you all in the next one. Thank you so much for joining us. And Kimberly, thank you. All right, take care.
Thank you, guys. You too. Bye-bye.
Bye.